Uh, Sebastian, do you have another speaker for me?
But Hensley is in the room.
Matt, can you hear me?
I can hear you, John. How you doing today?
Great. Go ahead and get your PowerPoint up. Um, Matt Hensley has been a full-time trader since 2014 as the founder and head of trading education at Tiresias Trading. With a background in teaching and coaching, his trading style emphasizes proper position sizing, defined risk, and swinging for consistent base hits rather than home runs. Welcome to Matt Hedge Fund Trader Matt Hensley. So,
Well,
Matt, one of the big misconceptions I have noticed over the decades is that people view the stock market in terms of home runs, buying one stock that goes up 10 times,
mhm.
when in reality, all the professionals are aiming at an endless series of singles every day of the year.
That's absolutely correct, John. And it's something that, as I've in my career moved from stocks to options, and I've been predominantly a futures trader for the last 5 or 6 years. That's the way you have to do it because you're sitting there trying for these giant. How many of these people on social media do we hear about? Oh, I want to hit a 200 or 300 point move in the NQ, and it's like I'm just going to sit here and take my 20 to 25 points all day, and I'll trade relatively stress free compared to these guys that want to hold for quite some time. So I think you hit the nail on the head right there. Just compounding base hits. Hey, Tony Gwynn made a hell of a living doing that.
Yeah, absolutely. Anyway, you have until 5 minutes before the hour. I see we have a PowerPoint here, Pro Trader Desk.
Hmm.
So I'm going to go ahead and mute myself, and you have the floor.
Thank you very much, John. It's great to be back here with the Mad Hedge Fund Trader. I haven't been here for the last, I believe, couple of years, guys, and so I apologize. I haven't really updated my bio with John, but yes, I have. I have been trading full time since 2014. I started, as I said, in small cap stocks, and quickly tired of banging my head both figuratively and literally against the wall in that line of work. So I transitioned over to large cap options, and that's when a lot of things started to open up for me. At that point, I began working over at TradeStation in their education arm, helped putting together a lot of their educational material. We ran the You Can Trade brand out of there. And then I was out on my own for quite some time doing a lot of individual coaching, didn't really have like a formal setup for that. And then up until just about a month ago, I helped launch and spent about a year at Tradeify TV as their morning host, breaking down the markets for about 4 hours live per day, the futures market over in the prop firm space. And so, boy, it has been a wild ride. I have loved every single minute of it. This is one of the most challenging thing trading. I mean, it's one of the most challenging things you will ever do. But the great thing about trading, guys, and I realize I'm preaching to the choir here, but this is how I psych myself up for a good presentation. The beauty of trading is, guys, there's not a whole lot of prerequisites, right? Yeah, you do need some level of intelligence, but you don't have to be the smartest person in the room to be a successful trader. My goodness, I am proof walking of that. I try to not be the smartest guy in any room that I walk into, and usually I do that both by accident and on purpose. But you can do this and learn to do this at a couple hours a day. Now you need your screen time, you need your learning. It is going to take you some time, but you can work on this as a side hustle as you're working in your normal career. And more and more traders, guys, are making the jump to futures either as a primary trading instrument or asset class, excuse me, or a secondary as they manage their portfolios, either stocks and or options and or crypto. I've traded and dabbled in just about everything, and probably about 80% of my trading, my attention, my energy, my trading, my teaching is in futures. So I'm predominantly a futures day trader, and I'm going to share a little bit about one of my systems with you today. And so we're using trend and range to predict the next move. And my subtitle here, of course, is Frank Delarney and Steve Neeson walk into a bar. So if you don't know those particular traders, there's nothing I have ever read by these two gentlemen that I've not found really helpful to my trading. So we're going to get a little bit into that. Now, my presentation, guys, and I have a lot prepared. And what I tend to do is, and guys, you are free. I ask that you keep most of your questions till the end, but if you have something that's very specific to what I'm talking about, feel free to drop that in. I do have the chat up here, but if I don't see it, please just repeat your question later on. But there's two main parts to my talk today, and as I said, guys, I'll prepare a lot, and then I'll kind of move around and adjust a little bit depending on how I feel I need to cover things. And I always feel I need to bring my A game here for John and the Mad Hedge Fund Trader, because as John said, talking about decades in trading, and I looked at the panelists beforehand, and I've spoken at events with Tom Sosnoff and Price Headley before, two just amazing traders, and more importantly, amazing teachers of trading. And so it's like me sitting here with my 12-year career. In most places I go, and especially when I was in the futures prop firm space, I was the old guy. I was the OG. I come into events like this, and I'm still the baby. So I love doing them because it makes me feel young. But it's a real challenge to follow some of these outstanding speakers, and so bear with me as I make an attempt to do that. But we're going to talk about building a system in trading. Now, I'm going to be talking about specifically one of my trading systems, but at the same time, guys, this really applies to any kind of trading system that you're doing. If you're getting into stocks, if you're getting into options, you're getting into futures, crypto, whatever, you have to have a structure and you have to have a workflow around your trading. And so we're going to be specifically talking about that. We're also going to be talking about having I've done presentations, and when I was at Tradeify TV, we were very free and open with our language, but I try to keep it very professional for here. So I've said we're having the guts to actually trade that system without getting discouraged. We're going to talk a little bit about probabilities and how they can actually give you a little bit of comfort in your trading system when you hit a particular cold spell, because that's one of the biggest sins that new traders committed. And I say this as somebody who did this. And guys, in all the major trading mistakes out there, I've made them. And as the old saying goes, I don't make the same mistake twice. I make it 5 or 6 times just to be sure. So we're going to talk about strategy jumping, the dangers of that, and why you should commit yourself to 1 or 2 systems early in your career, just to get into the habit of understanding how long you have to trade a system to truly understand it and make it work. Now, guys, a lot of traders that I've spoken to, they have the same problem. They spend the whole session waiting for a setup, and then they react to that setup once it appears, right? The signal triggers, they enter, the move happens, and they decide along the way where to exit. And guys, I've always said trading is a workflow. Think back to any job that you've had, guys. And I realize this is, those that know me or have heard me speak before know I am far from some sort of corporate person, but I've worked in a lot of different environments and startups, both from the education side, the tech side, all of that. And so I realize this is a very corporate buzzword here, right, guys? Workflow. But to me, workflow is defined as a very specific set of steps that you take to enter a trade. Now, if you're a workflow, applies to anything, guys. When I was in high school, I did what a lot of people in my generation did. Worked in a restaurant, and in this case, I literally flipped burgers. Right. So if I'm it was a little car hop place in Northwest Indiana, long since out of business, but I worked on the grill there, and we had a workflow to create a cheeseburger. Right? Think about that. For any of you that have done that, you've worked in a restaurant, if you've worked in anything, there was a workflow to get certain things done. For the cheeseburger, we would butter and toast the bun. We would put the patty on the grill. If there were some grilled onions, we'd need those too as well. Finish everything up and build it, wrap it, put it in the basket, and put it with the order. And if that's the last part of the order, boom, order up, right? So there is a workflow to building a burger. There is a workflow. My wife is in supply chain. She's at work right now, and she has a specific workflow to put together orders that need to ship all over the world, right? She's tried explaining to me a couple of times, and my eyes just sort of glaze over, similarly to when I'm trying to tell her about trading. She loves me very much. I love her very much. We don't get a lot of excitement out of each other's profession, but we certainly enjoy the spoils of it. But with a workflow in trading, guys, we have 3 steps to that, what I like to call checklist, trigger, and entry. So 3 very specific things that lead us to a trade, and there's that entire workflow. To me, guys, the key to a good trading system is act. Don't react. Okay. Most setups force you to react. A good system, and there's a lot of good systems out there, guys. You've heard quite a bit about them today, I imagine, and over the next couple of days within this fantastic gathering of traders, you're going to hear even more. But you want to be able to act as you see things happen and not react to something that's already happened. And so that's one of the reasons. And again, I understand a lot of longer term traders will use things like moving averages, RSI, stochastics, things like that. And I find them helpful when I'm looking at longer term charts as well. But for my style of trading within futures, those are lagging indicators. And so when I'm looking at something, especially on a 1 minute NQ chart, which is, welcome to the jungle in terms of futures trading, when I'm looking at something like that, I want to know where I want to be positioned in a trade some minutes, sometimes even an hour or more before I enter that trade. And so I am always having certain things on watch. The majority of things I put on watch do not lead to a triggered trade. But in getting myself ready to trade, looking at the market structure on the 1 minute, the 15 minute, the 1 hour, the 4 hour, that's when I can begin to understand where I'm at in the larger time frame of the chart. And I can zone down to where exactly I want to enter a trade and put myself in the best have the best probabilities to be successful. Remember, in this business, guys, I don't care what time frame you're on. We're not in the prediction business. We're not in the prognostication business. We're in the statistics business. We're in the probability business. Any given trade can be a winner. Any given trade can be a loser. It's only when you build these up and you have 100, 200, 500, really more than 1,000 trades before you can understand if something works. First of all, if it works. Second of all, if it works for you. And third of all, if you're able to manage and accurately see the signals that you see coming in. Okay, but the best setups are the ones you know and can plan for in advance. And an example of what I'm saying, reactive, guys, the same thing can lead to an action or a reaction. So, for example, I use VWAP in some of my trades. I'm not going to be talking about that today, but I am a big VWAP trader. So as price approaches VWAP, let's say price is approaching VWAP from above, do I play it for a bounce or do I play it for a break? Or do I not play it? Well, the answer to that is going to depend on a lot of different little workflows and things on higher time frames. There's a lot of traders when they first learn something like VWAP, or even when they first learn something like the strategy I'm going to talk about in just a couple of minutes, well, I can go long or short here. Well, yes, technically you can go long or short there, but one of those two is going to have a higher probability of occurring based on the other things going on the chart. So that's specifically what we're looking for. And guys, it was actually a couple of years ago I got handed a book from a trader friend of a trader friend. Again, I've been in this business for quite some time, and one of the beauties of the last few years last 20 years in this business is that we can have events like this where there's traders coming from all over the world, and I can sit here in my recently refinished after a flood several months ago, but recently refinished basement, and I can talk to hundreds of people from all over the world. I can, John, I think is out there in California, and can tell me, hey, he can introduce me. I can do the event, and then I can go upstairs and take my dog for a walk while I think I'm the last speaker of the day, but while the next speaker comes up. So that's the beauty of this business. I miss the personal touch a little bit. Maybe I'm dating myself a little bit there, but I love going to the live events. I've done a ton of those over the years, but with that, guys, I've met so many people. I've learned so many different systems. 90% of them I don't use, but I'm a trading nerd. It's always interesting to learn. And I got a friend of a friend who handed me a book by a gentleman named Frank Delernia, an Australian trader who was predominantly looking at Forex and some other things, and ran just a whole bunch of statistics and looked at its several different ranges. And so this is the very basics of the system, guys. The math is straightforward. So, and you can do this, guys. This is built from a swing trading perspective, and he does talk a little bit about day trading. I exclusively use this method within day trading. I'm going to break that down a little more in a minute. But the math is straightforward, guys. We're going to take the high, low, and the most recent close across a 5-bar window. That's what we call the midline or the pivot point. So I work off of a daily indicator and an hourly indicator. So for the daily, I'm going to look at the last 5 bars, or my indicator will, and it will pull the high, it'll pull the low, it'll add them together, it'll add the most recent completed day's close. So in the futures, we're talking about 5 o'clock Eastern before they shut down for a little while, and we're gonna put those together. We're gonna divide them by 3, so average amount. And that is going to be our midline. We're then going to take the range between the high and the low, cut it in half, put half of it above the midpoint and half of it below. And that is our daily range. Okay. We're going to then follow that exact same principle for the hourly. Now, Mr. Delernia will talk about doing it on yearly and quarterly and 3 week, I think 6 month, 3 weeks, et cetera, et cetera. So for me, I specifically stick to the daily and the hourly. So that's what I'm looking for my entries and for my trades. So let's see, we've broken all that down. So it's two indicators. It's one math, as they say. I'm sure that's not very good English, but I'll go with it anyway. The daily structure is telling you where to trade, and specifically in what direction. The hourly is going to tell you when. So let's take a look at this on a chart, and you can see here on the left side of my screen, the red line at the top is the daily range high. And again, I'm using range in the context of what I just said. So this is not going to be the high of that particular days. There are days we hit the high of the range, or we even go above it. That it's static during any given day, so it will not adjust, unlike the hourly, which changes every hour. So we've got that daily. We've got the midpoint, which is that dotted line there in the middle at about 30,300. I tried to keep this very, when I do talks like this, guys, at the end of the day, I try to put that day's charts in there, just because I want it to be as topical and as in fact, when I deleted this, I think I took something out that was like 22,000. That was, so 6 months ago or 8 months ago or whatever. We seem to go up several thousand every week, and sort of this, it's almost this post-COVID buy the dip frenzy that we saw, obviously in the latter half of 2020 and into 2021. But then you can see that lighter shaded area within above the midline and below the daily range high is our hourly. And you can see that adjusting hour by hour. And this is a compressed 1 minute chart that I have here. So those 60 of those tiny little candlesticks within each one of those with each one of those hourly ranges. Okay. So the channel high is that upper boundary. Now, guys, it's important that when we're talking about certain things in trading, we have to do the old in theory and in practice, right? There's a lot of things in trading that work in theory. We have to see them in practice. Now, in theory, when we're talking about these daily ranges, it's the high is going to be, we're encountering resistance, right? We should be looking to sell up there. However, again, I've seen just way too many times where we've seen more of a break and extend pattern rather than a rejection of that. So am I shorting at the daily highs? I haven't done that for quite some time. And the only very few times where I've done that in the past 3 or 4 months are when the hourly range lines up with that as well. That's a separate setup. We're not talking about that one today. I've got a different example for you. Okay. So the channel high is that upper boundary, the 50% midline. It's the single most important line on my futures day trading chart, guys. It is again, that average of the previous 5 days high, the previous 5 days low, and yesterday's close divided by 3, and that is where I'm going to be. That is my bias line, and that's what I call it. So the 50% midline, the bias line. 90% of my trades above that line are going to be long. 90% of my trades, actually, I think it's 87% of my short trades, excuse me, of my trades below that line are short. I'm not saying I won't take the opposite, but it's going to be a scalp trade. It's going to be playing for 15, 20 handles in the NQ, no more. Whereas I may be playing for double or even triple that. If I'm looking at a trade that's in conjunction with my daily bias. So it's the overall market structure, the things that I'm looking at will tell me to be long above that daily midline and below the short. Now, in normal markets, and I'm using air quotes there because what are normal markets anymore, right? Anybody who's traded through subprime, I started getting interested in the markets after subprime, but I studied that quite a bit. I was still just getting out of high school during the .com bust, but I traded, I learned the markets through subprime. I traded through a lot of the interesting times in the early 2010s, traded through COVID, traded through Trump 1, traded through Biden, traded through Trump 2 now. So I've seen all these different market conditions. So when everyone says normal markets, I roll my eyes. What does that even mean anymore, right? But I will say this, in the year or so prior to the beginning of the Iran war, we would often see price action be both above and below the daily line quite frequently. I don't have exact statistics in front of me, but it was frequent, right? More than half the time. That's just not the case anymore. It's very rarely do we, once the New York session kicks in especially, very rarely do we see that line be breached or crossed. So just... That's usually a question people have. I wanted to cover that. The channel low is the lower boundary. That's structural support. That in theory, that would be a buy zone. Now, again, I don't trade the daily high and the daily low very often at all, and almost non-existently in the past couple of months, just because of the sort of, I've been keeping my trading very simple. I am a KISS trader, keep it simple, stupid. And I have felt the need, and how I have survived the last couple of months in the chaos and the volatility, and the volatility of the volatility is really simplifying what I do. And I will probably have about 8 to 10 different structural trades that I'll look at. And that doesn't just include the stuff in this particular, with these particular indicators, but it's VWAP, it's some other things that I look at, some candlestick structure. But right now I have traded nothing but this now for the last about 2.5 months, because I'm just cutting all the noise out. And that's what some of the real low time frames. And if I'm trying to make decisions off those lower time frames rather than just entries, that's where some of that noise can come in. Okay. So the standard day trade is, it says, guys, we sell at the high, we target the mid, we stop just outside the high, buy the low, et cetera, et cetera. Now I will do that within the hourly, but I won't necessarily do that within the daily. But today I want to talk about what we call in my room the setup number 2. Okay. And it's called the midline bounce, 50% bounce. We've got a couple different names for it, but actually, guys, this is a trade that we took today. And so it's a very, let's see. Oh, no, I'm sorry. I didn't put the wrong. No. Okay. That's perfect. Yeah. So you can see the structure on that particular trade. My next slide zooms in a little more on it. Okay. So its price is above the daily and the hourly mid. We retrace to the hourly mid. So again, we're above hourly, which gives us a short-term bias long. We're above the daily, which gives us a daily bias long. And now we're just looking for a retracement. We want to participate in the trend. We don't want to fight either the hourly trend or the daily trend, but where we're at is not going to give us value, which I don't, we always hear that word get tossed around. I don't care if you're a stock trader, options trader, et cetera, et cetera. We're looking for value, right? We're looking to buy at a lower price than we think something's immediately worth at that given time, right? NQ trade every day as well. Straight, yes. I have not traded oil since the Venezuela mess started, and I traded it probably, I think I traded about 70 or 80 times last year, excuse me. Overall, it's not one of I predominantly am in the NQ, ES, RTY, and the GC. But yes, oil is not even on my watch list right now, because it's a mess. And I know oil is always influenced by geopolitics, but we just have too much headline risk for me in oil right now. We have headline risk across the board. I got wicked out of a trade in the RTY yesterday when we had a deal, one of our many deals that get announced on almost a daily basis. So it was not a huge move, but it was just enough to stop me out of a trade before, of course, going right to where I wanted the trade to go at that point. And that's the name of the game, guys, right? We're getting to the point where if you've traded consistently since the Iran situation, as a day trader, you've been wicked into profit as many times you've been wicked out of, into a loss. I know it's a phrase that gets overused, but it is what it is at that point, right? A week or two of a big event, like if this Iran war had just been a week or two, then yes, it would have been one of those things that you could have come on either the wrong or the right side of some of those moves. Enough time, guys, and trust me, 10 plus years in this business, headlines have made me as much money as they cost me, and those things tend to even out over time. So I'm looking for a retracement to hourly mid. And guys, I have a few other extra things that I look at, but basically my entries at the hourly mid. We tap the hourly mid. I'm setting up the very first thing I do every time I set a trade. I set my stop loss based on market structure, but I won't go any lower than halfway between the midline and the low. And quite frankly, I like to be about a quarter. So I don't want to risk more than about 25 to 30 handles in a trade. I do continuously keep a 5-minute ATR on my screen. As you can see in the lower right-hand corner there, I enter based off a 1-minute chart, but I always want to know what the 5-minute ATR is. And I will typically not set my stop outside of that. In fact, I like to have it at half, but if it's sitting there under 30, I'll usually round up to about 20 or 25 handles. I'm in and out of trades in just a few minutes. Sometimes I'll end up holding something for a little longer, but I've diagnosed ADHD, guys. I don't have the attention span to sit for a 2 or 3 hour trade. I want to put my trade in, put my stop loss, put my profit target, and may the trading gods be ever in my favor at that point. And we of course we have our statistics that back up that they are in these particular situations. But once the trade is set, I really don't worry about it, and that's something that comes. I wish I could tell you that came after 2 or 3 years of trading. It really has just sort of manifested in the last 2 or 3 years, where my stress level trading, guys, is pretty low, and that doesn't mean it's gone. But you've been around the block in this enough times, guys. You've seen enough. Doesn't mean you don't feel a little anxiety getting in and out of your trades. But at some point, the probabilities kick in. And once you've seen a couple thousand trades in any given system, it works. And so you can't hang your hopes or your bank account on any given one trade or any given multiple trades. So some of the sweeteners, as I call them, guys, and I said I'm going for approximately 2-to-1. In reality, I'm once we get above 1.5-to-1. So let's say I have 20 handles stop. Once we get above 30 handles, and I'm saying for the NQ guys, because that's probably about 70% of my trade. So if I risk 20 handles to gain 30, once we get above 30, I'm not going to let it retrace a whole lot more. Now, if we're powering through, I can hit 50 handles on that. That's great. Or if I'm in multiple contracts, I can begin to scale out at that point. And my rule is once I begin to scale out on the profit side, the rest of my stop goes immediately to break even. I will not lose on the rest of those contracts, whether it's 5 or 8 micros or 2 or 3 minis or whatever the case may be. Those are some of the trade management rules that I have. But I'm looking for hourly ranges making higher highs or higher lows. And you can see that on this chart, guys, right? We had an expansion of the high and expansion of the low because that's 9 a.m. Central, so 10 a.m. Eastern. So that's the first candle that opens up after the hourly candle that opens up after the New York Open. And you can see throughout the day, guys, and you'll see on this next slide as well that we'll see the hourly ranges step up, as we like to say, and that gives us a really, really nice probability on that trade. We want to see the above VWAP. That's not a rule. It's more of a guideline, although most of these trades do end up, long trades, retracement trades do end up being above VWAP anyway, so it's not something I really even need to look at most of the time. I'm also looking at a sweep candle at low, and I don't want to get too heavy into sweep candles, so if you're not familiar with that concept, I encourage you to look that up in Investopedia or elsewhere, but those are really high, those don't happen as often as I'd like, but they add a really, really nice probability. We sweep out the lows of the previous candle, close within the real body of the previous candle. Ideally, for a long trade, that candle closes green, et cetera, et cetera, et cetera. So that's the type of thing that we're looking for, guys. Now, the daily mid sets the tone, and you can see here, actually this is a little more zoomed in version of this trade that I just showed you, complete with the executions, and you can see it's right here on the midline. This actually it was kind of a sweep candle because it actually closed above, but I was already into it at that point. I have some people that I work with that want a little bit extra in terms of confirmation. In fact, I have a gentleman I've worked with for the last few months who only wants to take trades in certain instruments. He only wants very certain setups, so he's only taking 2 to 3 trades per week. I'm doing about 2 to 4 per day within this system, and so he's looking for very specific setups. So he waits for an extra about 10 points of confirmation, and then he wants to hold for 50, 60, 70, 80 points. Now he's got to have a little bigger stop loss to do that as well. But there are elements of this system, and guys, there's actually elements of every system that are very customizable to your trading style, and that's what's really important. You're going to have people like myself that are going to talk about the systems that we use. There's going to be a lot of people in this conference, the 3-day conference, guys, that are going to talk about their systems, and they work for us. We hope they work for you. I hope this works for every single person that wants to learn it from me. But we also need to be realistic and understand that that's just not the case. And I finally feel I've been in this business long enough where I can say that, where somebody can approach me and say, hey, Matt, I'd like to work with you. Here's, and I can look at that. I don't think this is for you. In fact, I had somebody that reached out to me via email who just doesn't have the time to do a lot of day trading. And I referred him to a friend of mine who's a swing trader who teaches swing trading. I just said, you don't need 10 hours a day, but you need at least 1 to 2 hours a day during the New York session, be at your screens to look at what I want to look at. Now, once you've begun to master some of this stuff, my workflow at this trading system in this trading setup is very very simple, right? I do all the work of potential trades after the new hourly range is set. So at at 9 o'clock Central Time, 10 o'clock, 11 o'clock, noon, I will, as soon as the new hourly candle opens, I will look at the previous candle close on the hourly chart, and then I'm going to go into my 5-minute or 1-minute chart. I'm going to look at these hourly ranges. I'm going to look at And very often, guys, if I like what I'm seeing, and in fact, I can tell you I did this with this one, I will actually even set an entry. And I'll alert usually about 5 handles before that entry. So if I set my entry at, let's say, 30,300, I'll set an alert at about 30,305. So I will get a alert on, I use TradingView for a lot of my charting. So I'm going to get an alert on my phone when that alert triggers. And then we will be able to go to that chart, see, yes, okay, I'm going to keep that order in place because I like what I'm seeing here. Or, nah, you know what? I'm not liking what I'm seeing in terms of the structure, the candlesticks, etc. Whatever. We're going to pull that order. Most of the time, I'm going to go ahead with the trade because if I feel enough conviction to put an order out in the markets, I will feel enough conviction to let that go through. Very rarely a trade will trigger when I'm not directly looking at it. But again, the beauty of this system is at the top of every hour, I can look at and say, okay, this is very much in play here. This is very much in play. No, this one's below the midline and yet above the daily line, midline. So I've got to see this make a run before a run and a retracement before I'm interested in entering at that point. But the daily mid is what sets the tone, guys. For any Shorzy fans out there, we set the darn tone, right? And this sets the whole tone for my trading day. For even the beauty of this, guys, is even for there's some people that I've taught it to, including one of my buddies in the trading education space. He's been an options trader for like 20 years, and he wanted to get into futures day trading, and he was making a lot of the mistakes we all make when we first get in. And he was over trading. He was making between 20 and 25 trades per day, which for somebody who only makes 1 or 2 swing trades a week in options, that blew his mind. And so I introduced him just to the daily concept, and I said, try this. I said, just try this for a week, because he lost. I mean, he makes really good money when he does, but he lost a couple $1,000s. And he said, he did the smart thing. He said, I'm not putting any more money into the market until I have a little better understanding of what's going on. So I said, here's what I'm going to do. I'm going to send you the daily midline in the instruments that I look at it in every day. Try it for a couple of weeks on paper. Only take long trades when everything's above. Only take short trades when it's below. And it made a difference, right? If he went from averaging a little over 20, I think it was 24 and a half trades per day, down to averaging 16. That was still way too darn much in my opinion, but it at least started the process. And now we're working through some of the setups and going from there. But you can see the workflow, guys, is just, it takes so much of the guesswork out. And I understand you can have a rock solid workflow and there's still going to be emotions in trading, but the better your workflow is and the less reactive you are and more acting based on the price action that you anticipate might come, as opposed to I'm going to react immediately to what's happening right now. That's where there's a big difference, and you can begin to adjust some of your decision making and not letting your emotions interfere. Guys, I will be 100% honest. My emotions in trading, guys, like I said, I told you my stress in trading is as low as it's ever been. But when the emotions that I have when I'm in a trade now are honestly not that much better than they were when I first started. There's one key difference. That little line, that little neuron connection that connects those emotions to my trading decision making, I cut that years ago, thankfully. So I can sit here and I can have some anxiety and I can look at this and I can look at that. And I can say, all right, I'm not liking what I'm seeing. The trade's going a little bit against me, but hey, this system works, however, whatever setup I'm trading X percentage of the time. And guys, a big thing to tell you, and I know a lot of you know this, I know this is kind of one of those goes without saying to a lot of people, but if you're trading a system that's 1.5 to 1, reward to risk 1.8, I will try to always be above 1.8 to 1. Definitely want to be above 2 to 1 if I can make it. You don't need to win 50% of the time. Hell, you don't even need to win, 40% of the time. You can win about 35 to 40% of the time and be profitable. Now, yes, not as profitable necessarily as you'd like, and you want to get that ticking up as much as possible. But I've traded this system for 2.5 years, guys. My winning percentage in it is 47.8%. And I know, we're all here to talk about our trading and all that. I'm supposed to, those are rookie numbers. We got to pump those numbers up. No, that's what it is. 40, we're going to round down just for 47%. And I believe I'm 1.86 to 1 reward to risk. I haven't entered my last few days, so don't tell my mentor; she'll yell at me. But so that's basically kind of what I'm sitting at. And these guys on social media that just yell about 90% win rates. First of all, I'm like, Yeah, bro. All right, cool. It's good for you. And second of all, even if that's legit, I was like, I want to see your risk reward, right? So it's a if you don't if you're a couple years into your trading career, guys, as a day trader, but really any type of trader, but especially as a day trader, if you can't rattle off your winning percentage and your risk to reward, so your average winner, your average loser, your winning percentage in your trading, like what are you doing at that point, right? And that's yes, you get to the point where I'm at, or you get to the point where people right beyond me. Yeah, you got to look that up sometimes, but you should always know where it is. And if you're trading one system to start, which is exactly what you should be doing in day trading, especially futures day trading, learn one system, learn it well. Then once that's profitable, you can move on to the next one. You should immediately know, okay, I'm trading Matt's stack trade system. So my average winner is $400. My average loser is $220 or $220, whatever. My winning percentage is 46%. That's going to make you some money. If you're in the prop firm game, that's going to pass you some accounts. That's going to get you some payouts. If you're in, you have your own brokerage account, that's going to slowly but steadily build up over time. No guarantees, of course, guys. If you're looking for guarantees, this is not the business for you. But this is something, guys, that getting a grip on those statistics and those probabilities. And again, I've always found the crowd at the Mad Hedge Fund events is probably some of the more closer to intermediate and advanced traders as the beginners that I typically are accustomed to talking to. So there may be some of you guys going out there. Yeah, well, no crap, Matt, right? But for those that are really new to this, and guys, I know we don't have a ton. I don't think we have a ton of like day traders within this 3 days. I just want you guys to really kind of understand that it's all about the probabilities and statistics. It's not about any individual trade, and people don't understand that, and then they strategy jump, and that is a sin that new traders of every time frame and asset class are guilty of. It is infinitely worse in futures. It truly, truly is. It's just it can be pretty tough, guys. But yeah, so the daily mid, I don't trade it. I know, the daily mid will be a big entry for traders that are more swing traders that are looking at, 3 week, people, what I do with the daily and the 1 hour, some traders will do with the 3 week daily, 3 week and then daily on a swing trading perspective, or a yearly down to the 3 month for a long-term investing perspective. Again, the numbers are work out across almost any time frame over a long enough period of time. Now you go too far beyond that, of course, we only have 150 years of stock market data or something like that. So it's not like we have the decade in the yearly indicators, although I'm sure trading view could code that up. That might be entertaining. But that's specifically kind of what we're looking at in the daily mid is what sets the tone. Now, guys, I told you there's going to be 2 parts to this talk, so I want to take just 1 minute and tell you about what I do with some of these stack trade. That's the system that we use here. And there's 3 main setups. I talked about one, but with the stack trade alerts, guys, I just want to really, really quickly go through this to get this in your head. And I'm going to circle back to this at the end. The Stack Trade Alerts channel, guys, is something I literally just launched it yesterday. I was going to give it a little more time. I got the invite to speak at this event, so I've been staying up way past my bedtime to get everything ready. And finally, as of yesterday, it is ready. And it's a system I've been trading for almost 2 years, but we just started an alert channel for those that, again, I am a very limited believer in some of the passive learning in this business, guys. I think live trading rooms can be really helpful up to a point. At some point, you have to get out there and learn trading. So I think there's 2 really effective ways to learn. You either get alerts on a particular system, and yes, you can follow the exact rules of what I do, or you can kind of make those trades your own. Or what you can do, you can get a little more advanced mentorship. I do that as well. I'm not talking about that today because you guys don't really know me. And I said I was on an exclusivity deal for a little over a year, so I was unable to do these events. So most of you that have just come to the within the Mad Hedge Fund Trader family here probably never heard of me, but this is exactly what I just started, guys. So we start by giving the high, low, and mid, and every day the ES, the NQ, the RTY, CL, GC, YM. I'm missing one, I think. No, 6. That's it. So that'll usually that resets at the beginning of the trading session, guys. So that's known. First thing it's actually known the night before, but I post them first thing in the morning within the room. You can see my screen share here, guys. This is what is live. There's a chat component which is actually separate from this, and I'll tell you why. There's a very good reason for that. But this streams every day, guys. We got a little bit of a news feed here. We've got Oh, excuse me, getting a little dry throat there. We've got a little sticky here with what is on watch. You can see there's nothing on watch. And this was today, guys. We had a win in long in the NQ, a win long in the ES. Excuse me just a second here, guys. And so my rule for this system, we start that if we get +2 in terms of winners or -2 in terms of losers at any point. So like if we start the day with 2 wins, or let's say we have a win, a loss, and then a win, we're +2 at any point. We shut down for the day. Now we will still give certain alerts on A+ setups, but they're more like just, hey, here's a trade idea as opposed to actual trades that I'm in. Today, guys, we hit a couple of, we had an ES and an NQ trade. We doubled up on a very strong market action within the opening between 9 and 10 a.m. Central. Hit a couple of really nice winners and went from there. So it was it was a quick day, which is great because I got to review my slides and add a few more notes because, like I said, it's been a really hectic couple of months around here. But so we have that. We have an average of 3 alerts per day. On watch gives advanced alert of almost every trade. It's over. I actually, when I conceived of this alerts, guys, a couple months ago, again, limited sample size last 2 months, but it was about 90% of trades we knew about, sometimes as many as 10 to 15 to 20 minutes in advance. So we can put that on watch. And so that is a big edge. And that is something that not a lot of other places do. Usually it's just, especially a lot of the YouTubers out there, God love them, it's just like long NQ. Okay, well, you say that, you're operating on a 10 to 15 second. Well, first of all, a lot of them don't announce it unless the first couple points are in their favor, right? And by the time it gets up on the screen, it's already green. By the time you see that, you're probably 10, 15, 20 seconds of latency, depending on where they're streaming from, where you're from, etc. So you can already see how this becomes a problem. So having something on watch, really even a few minutes before, let alone 15, 20, 30 minutes before, I believe the average is about 8 to 10 minutes before where something is going to be on watch. And guys, a lot of times that's going to happen right at the top of the hour when our hourly range is reset, right? So you're going to get an entry alert in the alerts chat within 5 seconds of the entry. About half the time, I will post the exact entry before I get in. So again, there's times I want to see a little extra correction. Like if we're below VWAP and I'm looking at a long trade, I'm going to want to see probably a candlestick. So I may see on watch, but I may not enter the trade on a break of the midline. But if everything is lining up, I will say, hey guys, if the NQ ticks down to 30,250. I am in at that point. I also do size into trades. I don't. I typically don't average down or DCA any trades. I think that's a quick method to a broke account. But for example, if I take one contract at the midline and price drops, if it pops back up through there, I may take a second. If it's something where my position size, my average position size is more than one contract, or especially like when I was trading in very volatile times, I'd be more in the 5 to 8 micros, which is small position size for a futures trader. But it's, when our 5-minute ATR is 50, 60, 70, that's about the highest position size that I can go. And my position size, entries, exits, and we do a monthly live Q&A over there, guys. So that's something to look forward to. Launch price on this, guys, it's just $59 a month. It's a basically it comes out to about $1 an alert if we're looking at the average alerts if we do 3 every day. So you're looking at about $1 an alert. Just to and again, guys, we're building up the track record with this. This is going to probably, I know this is supposed to be like salesmanship and all that, but guys, I probably about, I'm not going to say this anywhere else, but about every 100 people that I get to join, we're going to kick that price up about $10 but for right now, I'm asking people to take a little bit of a chance and come into somebody, to a room where somebody you don't really know who I am. So I'm going to keep that really affordable and give you, for a month, $59. I think that's worth it. Now, here's the thing, guys, when it comes to any individual system, right? Will you stick with a system? So let's say, and a lot of you have no doubt done this, right? You have, whether it's a course and you're going to see some great courses, advertised in these 3 days, you're going to, and let's say, it works, right? I learned a system from somebody years ago on VWAP, and I knew it worked because I watched him do it. I saw somebody else do a whole different other market structure system. It didn't speak to me, so I didn't. But the data shows that it works. The math shows that it works, right? But guys, what do you do when you have 3 trades that go against you, right? Like, how many strategies have you tried in the last year? Okay, how many did you actually give a fair shot to? Because I can tell you this. Okay. Murphy's law of trading is that whenever you start a new system, and guys, I have learned systems from people that I've traded fairly quickly. I've built systems from scratch that have taken sometimes a year or two to fully deploy. And I can guarantee every system you trade, the first trade or two, sometimes more, is going to be a loser. Now, whether that's just the trading gods keeping us humble, whether that's just the statistics at play, or that's just because we don't quite understand the system and maybe we don't take the greatest entry. But that is almost a guarantee that any system you learn, any system you deploy into live accounts or funded accounts is going to uh, is going to start with a loss. That's just the nature of the business. And it's very common that you're going to see streaks, cold streaks, hot streaks. I can tell you the everything that I've learned and traded within the Lernian system tends to have streaks of both, right? The first month of the Iran war, it was a cold streak. It just was not responding well. The structure was not responding well. And then in the last month, we've hit a little bit of a warm streak, right? I won't call it an ice cold streak before in a hot streak now, but we're going to call it well, I guess what's the opposite of lukewarm? I guess cool streak, room temperature streak, followed by a pretty decent warm streak. But guys, keep in mind the statistics that are behind all this. Now, let's say we alert 3 trades per day over the course of, now it's going to be more than 1,000 over a year, right? But let's say over 300 trading days, that's going to average out to 900 trades. So we're going to go a little higher to round us up to 1,000. Now we want to have more than coin flip odds on our sides, but let's just say any trade had exactly a 50% chance of working. So if we flip a coin 1,000 times, guys, the probability of at least one streak of 5 tails, and tails will be losers as opposed to the win and the loss, is going to be, we're going to say it's a certainty. I mean, if you take any sort of wager or trade that has this probability, and you close it as a loss or it's a lose, just retire at that point. At least 2 separate streaks of 5 tails or 5 losses, it's still almost a mathematical certainty. And guys, at least one streak of 10 losses in a row or even 10 wins in a row is just shy of 2 and 5. Okay, so you can see, guys, how the statistics, it looks like they lie to you, but they don't. Probabilities and statistics in this business trump everything. And until you've back tested or traded something at least a few hundred times, let alone 1,000 or more, you don't really know. For those that aren't familiar with, again, the last place I worked before kind of striking out on my own here was I was the morning host at Tradeify TV. In the time that I was there, we went from 8,000 to 80,000 subscribers on YouTube, and so we would stream our trades every day, quite some time for about 4 hours. It was tough. I loved every minute out of it. It was one of the tougher jobs that I've had, and one thing that I saw, and so the Tradeify is what we call a prop firm company. If you've ever heard of Top Step or Apex or Lucid Trading, so you pay a fee to take an eval. You pass the eval, you can get access to certain capital, whether it's sim or real. I'm not going to go into the whole structure, but one of the biggest mistakes that people in those firms make is sometimes you can pass or fail an account in 3 to 5 trades. Okay, so one of the most common things I'd see somebody lose 5, 6, 7, 8, 10 accounts, whatever, and they're new traders. That's going to happen. I'm glad they weren't around when I first started trading, because I probably would have lost 100, right? But then they pass one and they think they've got it all figured out. Well, no, you hit a 3 to 5 trade hot streak, maybe you hit 5 trades in wins in a row, which these statistics will tell us is very likely over a long period of time. That doesn't make you a competent trader all of the sudden, right? So you failed 9 out of 10 evals. Just the one you passed doesn't make you a great trader. And those numbers continue to again, the more data points that we had, the more normalized the data becomes, and we can make educated decisions off of whether we trade a strategy or not. Okay, so guys, again, I just want to remind you, learn a system, stick with it. So within, guys, so I know a lot of traders out there have Discords now. I'm not necessarily going to knock that, especially day traders. I don't use it in that manner, because for me, there's just too many security concerns. And there's too many scammers that can get access to a lot of things there. I have a friend whose server was just hacked and taken over on a raid. What a nightmare. So I actually just have a small community built into my site, into the infrastructure of my site. And guys, this is just pure alerts. And so one of the really cool things, guys, as I said, I want to bring this down, and I'm going to put this. I'm going to put the link to sign up for this in the chat right now, guys. Oh, there we go. Got to get that. There we go. So that's the link to sign up here, guys. And one of the really cool things, guys, that not a lot of day traders do. I know a lot of really good swing traders do this, but we actually have mobile alerts on our trades. Now, the ideal situation is to be in the chat and see it as it's posted, or especially if it's on watch. But if I have something on watch at a specific level, guys, that can be alerted, and it's not an extra cost or anything like that. You download the app. It's called the Kajabi app, which is the infrastructure my site is built on. You sign in with your credentials there. You enable notifications, and I checked the latency of this all weekend. I ran about 30 different tests on it. The average latency is about 3 to 4 seconds. Now, some of that is going to depend on where you are in the world, who your mobile provider is your phone on Wi-Fi or not, et cetera, et cetera. But to get even 10 seconds notification on a trade that I'm not even in yet, that that may come a minute or 2 minutes or 5 minutes later, that to me is invaluable. So you can, for those that have their screens already taken over, you don't have room for a little small chat box where I alert everything. And again, this screen share, guys, covers that as well. You can see the trades in action. So if I place an order, you'll already be able to see it there. But at that point, guys, it's your decisions to make in terms of whether you take the trade and how you want to size yeah, I can talk. I swear it's been a long day. I've been talking all day. But yeah, so we have mobile alerts. We give all of this. And again, guys, it's $59 per month. Again, I do some more advanced stuff as well. But if you're not familiar with me, I really don't want to offer that to you yet, because I am so protective of how I market myself and put stuff out there. So I don't want anybody to regret their purchases. And guys have been in this for 10 years, and I've had exactly one refund request. And it was somebody who watched all of my videos and then asked for a refund in the course that I was doing. I don't offer courses anymore. It's just not something I do. But I just have the more advanced mentorship stuff. But if you're at all interested in learning from me, I encourage you to check this out. And join us for a month. And guys, one of the other things I have in this, I have a once a client, always a client policy, which means you are always welcome to email me. I am a one-man company, guys. This is the first time I've ever done this. Pro Trader Desk is me, and I am Pro Trader Desk, right? I don't have a marketing person. I don't have any of that kind of stuff. All emails I respond to personally. And my email, guys, is just, well, you can see it wherever you see it. But this is how you can begin to learn from me, and I will definitely encourage you to do so. But other than that, guys, I do have just a common, common sense in a mainstream strategy can't work for long. If I know. Yeah, thank you, Patricia. That's a great point. So I do have just a couple of minutes for questions if anybody has them. But other than that, then I know I'm kind of running out of time, and John was gracious enough to give me a couple of extra minutes. But other than that, guys, feel free to check out this offer. And yeah, on my website you can see the contact information as well, and feel free to reach out if you have any questions on the stack trade alerts. But like I said, guys, it's basically a buck a trade if it averages out over the course of the next month or so. But even that, it's just a handful of bucks per trading day. So I highly encourage you to take advantage of this. And hey, if you don't like it, it doesn't work for you, or for whatever reason, it's just not, you're not out several $100s or several $1,000s on that. You can just go from there. So yeah, great to see support for the NQ traders. You're darn right. Like I said, I know day trading and futures day trading is not as common in some of these spaces that in some of the people that have come into that do these type of events. But I love the world. It's a fast-paced world. It's fun. We don't do this for excitement. We don't do this for fun. In fact, trading, when it's done right, guys, is exceptionally boring. But the spoils of our trading is certainly fun and exciting, guys. So I hope you'll check this out. I thank John for inviting me back after a year. I'm barely getting back up and running on my own, but I'm really, really excited for it. So thank you, guys. Appreciate it. I will just sit and take questions if anybody's got any questions here. It came from teaching before trading. When a student keeps over trading despite knowing better, what's actually going on psychologically, and how do you fix it? Oh, Sebastian, that's a fantastic flipping question, man. I will tell you that. So, like I said, here's a fun story for me. So the one book I recommend everybody reads as a trader is The Disciplined Trader by Mark Douglas. I read that book before I made my first trade, and yet I made every mistake in that. I mean, I laughed at the people that was like, this idiot is doing this, is over trading. I'm not going to do that when I start. I know better. Yeah, okay. I made every mistake in that book. Made them, like I said, made them multiple times. And yeah, over trading is a deadly one because again, and I think even Patricia, it's that like it's certain strategies, the market, it's a lot like a casino, guys. You keep rolling the dice, you're going to lose eventually. And if it's less a problem of over trading. Joan, the offer is just above here. I will put it back in so you can there's the link that should be showing up in your chat there. But yeah, it is a boy, it's a fun world, guys. I love the learning aspect of trading. I am a trading nerd through and through. I was able to catch a little bit of the presenter right before me. I had other stuff going on today. I'm definitely going to be attending the conference tomorrow as just like you guys in the chat just watching. So don't worry, I'm not going to use my speaker link for that, guys. I have that under another email. But yeah, I'm really looking forward to it. 2 to 4 alerts each day from our stack trade system, daily bias lines, and 6 instruments. So the instruments that the bias lines are in: NQES, RTY, YM, GC, and CL. What am I trading right now? About, I want to say just shy of 80% of my trades in calendar 2026 are in the NQ, the ES, and the GC. I dabbled a little bit in the RTY and the YM. I have not traded CL in the last 6 months. Well, Patricia, the best of luck to you. I wish you the absolute best. It's a challenging world. And I traded a lot of those combines and evals when I was working there because they gave us a bunch. It's tough, but it teaches you risk management. If you're trading in the prop firms and you can't learn risk management, you're never going to learn it. Because yeah, I mean, like I said, it literally feels like banging your head against the wall some days. In the days of trailing drawdowns or intraday drawdowns or whatever the rules are at whatever firm you're trading with, some are a little more lax, some are not. People say I'm going to find the easiest rules. I said no, pick the hardest because that's how you're going to learn how to be a good trader. Absolutely, Patricia. I love that attitude. That is outstanding. You got to be stubborn in this business. You have to be stubborn enough not to quit, but not so stubborn that you won't make changes. I am very stubborn, and I have references. My wife's at work. If she was here, she'd come down and nod, definitely. So, all right, guys, I think my time is up. So I appreciate everyone being here. Again, my link is in the chat if you would like to learn with me. Have a great rest of your day.
Hey, Matt, I got to tell you my worst trading story ever.
Oh, absolutely. I can't wait.
You mentioned your wife.
Yes.
I had just moved to New York to be the New York correspondent for The Economist and also the White House correspondent. And somebody introduced me to this broker at Merrill Lynch. I forget his name. And he said, there's this great tech trade. You got to do it. There's options that expire in 2 weeks. You got to buy them. I thought, great. And I put my wife's entire salary for the year into the trade.
Oof.
And 2 weeks later, they expire worthless.
Oh, man. That's a tough conversation.
And I ended up sleeping on the couch for a month after that one.
I do that. I sleep on the couch sometimes too for completely separate reasons. But
this is my welcome to Wall Street, F you trade.
We all have a few of those. Yeah, we all have a few of those. Yeah.
The other thing that happened is after we'd been there 3 days, we went out to lunch, and my wife hung her purse on the back of her chair, and within 3 minutes it was gone, and within 6 minutes, an $800 leather jacket from Alexander showed up on our bill. That was another welcome to New York.
I guess, man. I have been in. I was in New York several times before COVID. I was at a conference actually about 2 weeks before the lockdowns, and I was back briefly afterwards because I had a friend over there. But yeah, that's some fun moments. I grew up around Chicago, so I had plenty of welcome to Chicago moments.
All right. Well, thanks for joining us today. Love to have you back. And just to remind everybody, the link to Matt's dedicated sales page is up here. Doug, can you put it in, or Sebastian? Yeah, there it is. It's at the bottom of the chat box, protradedesk.com. And everybody, good luck and good trading.